All right, guys. Just want to keep you guys updated on market briefs here. Pretty interesting read here for today. Um, this is all from Jaspreet Singh on his website. His YouTube channel is The Minority Mindset. So I just want to read up on here. The U.S. household debt had just increased at its fastest rate since 2007. The total now stands at a record of 16.5 trillion. It's pretty crazy. What's going on today? Inflation cools off. BlockFi fights bankruptcy. If you guys do not know, BlockFi, other crypto exchanges, what has happened with FTX, right? And also with Binance not backing them up. This is pretty crazy to see what is going to happen with all the crypto exchanges for those that are coming in now or that came in this year. And what could possibly happen if for those that are cannot withdraw their money, cannot take any money out of cryptocurrency exchanges? Russian missiles hit Poland. I saw this yesterday. All right, so let's talk about this. Advertising. I'm just reading this now too. So the advertisement market is currently weaker than any point during the pandemic slowdown of 2020. How bad is it? If ad spending doesn't improve, the slowdown will hit digitally focused companies hard come earnings time. These media companies rely on ads have dropped 50% in 2022. Snap, Warner Brothers Discovery, Meta, BuzzFeed. This is crazy because without the ads, I'm not saying ads are bad, but for those that are doing like YouTube, those that are doing like Facebook advertising to get paid, right? So there's a lot of I don't want to say speculation, but just be well aware of how the advertising is going. So let's talk about the slowdown. Advertisers are cutting back as the Federal Reserve raises interest rates to cool inflation. Yep, that's true. More inflation cooling signals. Expectation. Dow Jones expected the producer price index to jump. Reality, it only rose 0.2%. Well, I wouldn't even expect it to grow that much anyways. So interest rates on many retail credit cards are at insane levels. Yes, they are. Retail credit cards are lines of credit offered by stores such as Macy's, Best Buy, and Kohl's. Currently, the most expensive retail credit cards may come with 30.74% annual percentage rate. But I mean, most credit cards are that high, and even personal lines of credit, like personal loans, there's some that go even above 100%. If you guys know what I'm talking about, like those fast payday loans. So, credit cards are always known to be high, anyways. Um, Personally, I would not recommend anything more than $1,000 limit. That's just my recommendation. As the Federal Reserve hikes interest rates, what retailers may charge you for store credit cards reaching new highs? Well, it's going to get higher anyways. He's promoting this app. Privacy secret blocks ads and trackers. I don't know how legit this app is. So he promotes a lot of stuff. And he's an affiliate for a lot of market brands. UK inflation plus 10.1%. This is crazy. Really. Breaking news. Russian missiles crossed over into Poland yesterday, according to U.S. intelligence. Two Polish citizens were killed in the strike. It is still undetermined if Russian or Ukrainian forces fired the missiles. Really? You guys just said Russian missiles crossed over. And then now I don't understand this sentence at all. It is still undetermined if Russian or Ukrainian forces fired the missiles. It clearly states right here that it says Russian missiles cross over Poland. So this is just so contradicting itself on this paragraph here. I just don't understand why they. This is why I'm not a fan of politics. I'm not, but I keep up to date with it. Okay. Pentagon spokesman, okay, declined to comment if the attack would trigger Article 5 or NATO's collective defense. Well, if it does trigger, then we go over there and help them out. That's The last and only time Article 5 was invoked was following the 9/11 terrorist attacks. That's right, because we went to war with Iraq. So I don't think they would. I don't think they would provoke the Article 5. I don't think they would. Too much money at risk at this point. Well, too much debt too. On the brink of disaster, UK housing market could be near a major downturn. The number of new potential homebuyers dropped to its lowest level last week since 2008. Isn't that crazy? Notice that everything they've talked about goes back to 2008 and 2007. The crash didn't really happen until like the beginning of 2009. So I just want to reiterate this. You know, history has a way of repeating itself, but in this term and in this scenario, it is totally different because it all started way back in the pandemic in 2020, right? And now this after the pandemic, what have we been doing? We just been printing so much money and trying to flood the markets as much as possible, but we have so much debt, right? And also the supply chain sector is taking a hit. And then guess what they do? Oh, let's jack up rates, fight inflation. I don't know. It's a ticking time bomb. I just want to say this for you guys to be fully prepared because I don't think people can understand the magnitude. Now, I'm saying that word, the magnitude of what potentially could happen with all countries do fall. And so I'm not talking about a World War III. What I'm talking about is the huge economic crisis collapse. And so the ECC, that's what I'm calling now, the economic crisis collapse, baby. All right, so let's talk about this. Hi, no, it's not just the UK. Oxford Economics predicts property prices will fall by at least 15 to 20% and 9/18. I don't know what that means. Nine out of the 18 major economies: Australia, Canada, the Netherlands, and New Zealand. I agree with that. Yeah. Baby boom. Let's get it, baby boom. The world population reached a record of 8 billion people. India is even expected to beat out China for the most populated country this year. Since 1950, the world population has tripled due to a drop in mortality and boost in life expectancy. Crypto, I don't know. Well, I mean, they did go down, but okay, I'm going to read these numbers here. Let's talk about what happened. When FTX filed for Chapter 11 bankruptcy, the company indicated it had over 100,000 creditors. Okay. Bankruptcy documents show that FTX actually had more than 1 million creditors involved in the case. FTX is expected to release the names of 50 of its largest creditors by the end of the week. You know who that is? The banks, bro. You know how much money that's tied into the banks? I'm just saying. I mean, where are they getting this money? I highly doubt he had all that money. What does this mean? The effects of FTX collapse would be more catastrophic than expected. Yes, like continued layoffs and the sinking of other crypto exchanges. Yeah, this is pretty crazy. I just want to say that, I mean, the job layoffs are just the beginning. I mean, who knows how many more companies are going to lay off workers to have some kind of, you know, I don't want to say income, but I mean profit, more profits to gain versus more losses, the hiring process of employees, how many contractors are going to not be contracted, agents, freelance agents, people, even people that are self-employed, where the market's going to go, in the next, I'd say, before Biden's term's done, what's really gonna be popping off, before his term is done in 2024. I mean, next year could be pretty scary. I don't want to make it seem like I always want to see what else we got here. Crypto exchange BlockFi could potentially file for bankruptcy, filing suit with the FTX. Yes, BlockFi has sent out an email 2 days ago. I read it. I deleted it, but they did mention that they weren't going to file bankruptcy. Well, it's coming. So they said that they will provide as much support for their clients and customers, but I don't know about that. So let's see there. Last week, BlockFi paused all withdrawals. Yes, they did. They're in the thick of FTX news. Now a report shows that the exchange has significant exposure in an FTX. BlockFi denied that most of its assets were tied up into FTX, but it disclosed a line of credit and specific obligations from the now bankrupt crypto exchange. So, it I would really, this is my recommendation, is to pull out as much as you can and to have cash on hand. You can't go wrong having cash on hand. If not, liquidate somewhere, put it in a different portfolio. I would highly recommend having either some kind of life insurance policy plan, like those index universal life insurance policy plans. I know a lot of people don't believe in life insurance policies, but that is another form of, another form of portfolio, life insurance policies. I'm some kind of, I don't want to say annuity, some kind of a different investment portfolio for the time being. And that way you don't get caught up in the mix of when crypto does come down even harder. Who knows how much they're going to crash it down? I mean, if they're talking about a big crash, who knows, right? And like I said, this is just the beginning of where crypto exchanges are taking a hit. And if FTX even goes down even further, I mean, we're talking how many creditors that they have borrowed money, right? And that they have used that money, and now they're going bankrupt. And now BlockFi is going bankrupt. And now other exchanges going bankrupt. And now this is going to be a snowball effect, right? It's a ripple effect. So eventually something's got to give, right? I mean, the two biggest markets I always look for is the housing market and the stock market. Time for a change. Let's see here. TCI from memory says Google must make workforce and salaries cuts ASAP. Unlike other major tech firms, Alphabet has avoided making any major job cuts this year and only temporarily slowed down on hiring. Even with the slowdown, company headcount has increased an annual rate. TCI, which owns $6 billion stake in Alphabet, says its hiring pace is excessive. But the shares are down 30% this year. Interesting. Ooh, Walmart, yep. Juicy Steak, Berkshire Hathaway shares, yeah. Shopping spree, major retailers rallied yesterday. Well, yeah, because the holidays are coming up. And real estate. Told you so. Real estate agents aren't surprised by the current struggles of digital real estate markets. Zillow and Redfin are online brokerage and house flipping companies that recently cut thousands of jobs. They compete with old school real estate agents, but they also rely on real estate agents to populate their sites. Interesting. Real estate agents use Zillow for listings, but they openly complain about outlandish rates for marketing with Zillow. A lot of people rely on companies like Zillow for marketing. The issue is that they take the data we pay for and then we try and sell it back to us. Yeah, that's true. Yeah, they do that. The fact is that if real estate agents pull their marketing money from Zillow, they fold overnight. Interesting. So it's a lot to take in. Like I said, this is a pretty interesting read. I skimmed through it. And then I was like, wow, this is pretty good to put on YouTube. Like I said, follow Jaspreet Singh. He's very knowledgeable in economics, finance, investing. So like I said, I don't want to talk too much about this whole crash coming or this whole economic collapse or maybe a possible war. US might go to war. I mean, there's just too much possibilities at this point where you can't create in your head, right? So, in that essence, just be financially and mentally prepared when it happens. And I just want to say that we can only anticipate so much of what's going to happen in the markets. I don't even know what the first thing's going to go, right? I mean, at this point, could be crypto, could be all the crypto exchanges going bankrupt. That'd be pretty insane. That'd be really insane. And so, um, and then from there, let's see how many banks were backing up crypto. And then if the banks take a dive, well, we know what's coming after that. So yeah, so it's a big snowball effect. It just keeps going downhill, right? Like I said, it's a time coming. Uh, I mean, I don't know how much more further they're gonna really try and hide this because it's coming, you know. I'm not gonna say like it's gonna be like a really bad, like the next 10 years are gonna be bad or something. What I want to say is that, the first couple years is to be well off and be financially prepared. Save your money, right? Have cash on hand and only buy what you need, and don't be spending all your money. I just be honest right now. You gotta be, really toning yourself down on the finance side for sure. And so other than that, stay tuned. I don't know what to expect. But like I said, just be well prepared because when that market does come down hard, you have to be really, really prepared. Yeah, on the finance side, and just be mentally right. When I talk about the mental readiness, is that you know don't throw yourself off. Don't be in a negative state of mind. Don't be so negative to yourself, saying, "Oh my gosh, I should have done this or should have done that." We don't know when the crisis comes. When it does hit, hey, and so that is something that we can work. That's something that we all find a way to collaborate and work with each other. As a community, with the nation, and and find ways to survive in the environment and then keep thriving from there. All right. So, Arnett, peace out, guys. Until next time.